Hey guys, it's a Dividend guy here. Happy Friday. Hopefully you guys had a great holiday. Let's take a look at how the portfolio did, some of this, how the stocks are performing, and some of the stocks that I added to my watch list. So let's take a quick look. So today we're down 28 bucks, not a huge loss, still above 17k, so we're good there. For the week we're down almost 100 bucks. Again, not huge. Uh, on the month we are up 398, which is great. For the 3 month mark, we're up $2,300 for the year. So of 2019, we are up almost 3K. All time since I started investing last April, we are up 24, almost $2,500. So pretty good returns as of late. For the past week, it's been a little rocky, but that's okay. So let's take a look at my stocks and how they're performing individually. And the market closes in like 3 minutes, so I just figured I'd try to catch it right before close. So for today, we're down about $3, but overall for Altria, we are up almost 500. For Coca-Cola, we are up about $5 today and up uh, about 72 for the total return. For AT&T, we are up $4 and for today, and total we are up over 500. For AbbVie, today we are down 34.60, but the total return we are up over $1,000. For Tanger Factory Outlets, SKT, we are up about 55 cents today, and our total return we're up 50 cents. That one was down, but we are up now, which is great. Next, we have Walgreens. So for today, we only made about 10 cents, and our total return we're up only about $4.40. ExxonMobil. For today, we're down 4.93. Our total return, we're down $1.02. And Target, we are up 220 today, and our total return, we were up $4 or $414. So that one's doing phenomenal. So overall, can't complain about the portfolio. We're down a little bit, but that gives me buying opportunities to reinvest. So not too worried about it. So then we're going to go into our watch list. And keep in mind, guys, some of these kind of go against what I'm my main investment philosophy, but I'm doing it because a lot of the stocks, as you can see, are $50 plus stocks in my portfolio, and most of these positions I don't want to buy right now. So the reason I'm looking at cheaper stocks is because the ones that I really love, as in AT&T and AbbVie, overpriced. Uh, Exxon is a good deal, but Target is not. Walgreens, I'd boost a little bit. So I'm choosing stocks that I can be more aggressive in and reinvest faster, even if they're not a dividend aristocrat or king. And keep in mind, it's not going to be a big portion of my portfolio, so they're not going to be the best. Oh, hi Malone. Sorry, one of my friends just posted a video. So keep in mind that some of these cheaper stocks are just for that purpose. Therefore, fast generating cash a little faster, so I can reinvest it into other stocks. So, and they won't be big positions. So like SKT is going to stay below like 7 to 10% of my portfolio. So, and I will add money to other positions accordingly to keep the cheaper stocks at bay, so they're not a big portion of my portfolio. So overall, all three of the stocks that I've picked, being Macy's, SKT, and Levi, they all three together will be less than 10% of the portfolio. So again, my allocation, I'm going to be very strict with how much I have allocated to those stocks. So first up is Macy's. It's a department store. It's declining. I know that, but I've seen that they have a lot of real estate on the books, and they are trying to repurpose their stores to make it more consumer friendly and try to fight off Amazon. Guys, I know Macy's isn't a great investment. I'm just doing it to generate cash because I do believe that they have a pretty good, yeah, they have a, let's say at least a 7% yield. That beats inflation by a pretty good amount. They have enough incoming cash flow to cover their dividend. So while I know it's not the safest business to be in, I do recognize that they have a great dividend and they have enough cash to cover it. Next, Levi Strauss. I'm pretty sure I said this in the last video, but somebody was surprised that I was investing in them. So, Levi Strauss was public before they went private. Now they're public again in 2018, or sorry, 2019. So, I buy Levi jeans strictly Like I don't buy any other brand of jeans. So when it comes to like stocks that I love, Coca-Cola is number one and Levi Strauss is going to be number two. As in products that I actually go out to buy. Like when I go to um, a store for clothes, I look strictly at Levi jeans, nothing else. So this is one of those products that, like they say, consumers get tied to brands, right? And when it comes to jeans, I like Levi's. Excuse me. I like Levi jeans. I like the cut. I like the fit. They were the first pair of jeans that I really enjoyed wearing. Like I always hated wearing jeans because I was kind of a weird size. I was pretty. I'm skinnier than the normal average person. I was really skinny growing up, so I like the cut. I like the fit. Most of the time, jeans, normal jeans like bootleg cuts, are very um, loose on me, and I don't like that. I like tight fitting jeans. So Levi just kind of answered the call. They were exactly what I needed, and they fit right. And they are a little bit more on the more expensive side, but not necessarily for jeans. They're not expensive, but for me, spending like 40 to 60 on a pair of jeans is a little expensive, but the quality is there. So I'm okay with spending it. So like there's certain things that I don't mind up spending for or paying more for. Levi jeans is definitely one of them. Coca Cola, I don't mind buying because there's knockoff brands. I'd rather have Coca Cola. And then there's like Godfather's Pizza, which is a pizza chain here in Cedar Rapids where I live, and I love their product. So I like it better than all the big chain pizza stores, and it's a little bit more expensive, but I feel like the product and the quality of the pizza, of the breadsticks, of everything in that pizza chain is better than the big guys. So I don't mind charging for that or paying more for that as well. So when it comes to it, I like Levi Strauss. They pay 369.12. So the goal is to have Macy's pay me for the first for January, SKT pay me in February, and then Levi pay me in March. So that way I get a cheaper stock or a cheaper option. So let's say if for the first of the month, let's say that I don't know, Altria and Coca Cola, I feel like they're overpriced or they ran up or whatever. If there's not a deal in the stocks that I currently have, these like $20 or below stocks will be where the money goes. Just because I know I can reinvest in them pretty aggressively. Like so for the second month of the year, AbbVie and AT&T are going to pay me $102. Well, I don't feel like those are good buying opportunities. So instead of boosting up my average cost, I might as well put it in something that can pay me more money, right? And not have to sacrifice my overall return for it. And I think over time those stocks will go back down, but I need something as an alternative to be able to invest in, and that's why I'm picking companies that either have a great yield and they're going to generate cash flow through dividends pretty quickly, like the Macy's stock will, or companies that I actually enjoy. I like going to the mall, so Tanger, and I like going to Tanger Factory Outlet. I like Levi Strauss. I love the company. I love the product that they have. So even if they're cheaper, I understand that it's kind of cyclical. Not everybody buys jeans, but that's something I like. So I'm willing to take the risk on to do that. So that way, when I get, a $30 check from ExxonMobil for the month, I don't make enough right now in 36912 to buy any of the stocks that I currently have. So, and most of the Dividend Kings that I'm looking at are $100 plus. So the $35 just sits there. So I'd rather have something that I can reinvest so my cash is always allocated and not just sitting there not getting anything. Because the whole point for me, investing wise, is to beat inflation and make money, right? So if it's above a yield, like this is a 3% yield, 2.2% or 2.5% is usually what inflation's around. So Levi's is going to beat that. Macy's at 9% or even 7%. I'm not sure how accurate um, that dividend yield is on Robinhood, but let's say it's 7%. Then I beat inflation by 5%. See what I mean? So for me, it's more about the generation of cash flow, whether the business is declining or not, as long as it has the cash flow to pay my dividend, and I feel like they're in a safe place to maybe not increase it with Macy's, but I feel like they can pay it. So, anyways, that's why I'm choosing those three stocks, is because that's a place to allocate my money, and I know I can get a couple shares out of it instead of just letting it sit. I have had that on there. Let me take a quick look because I know I added a couple. Cisco, they are a food distribution company, and I am pretty new to them, but they do. they distribute food to restaurants, healthcare, educational facilities, and lodging establishments. So when you think of like school cafeteria food, that's them, and I think that's great. They are also, I believe, a Dividend King. Motley Fool um, did a piece on 5 Dividend Kings you might not have heard of, and Target was on there, but so was Cisco, so I added them for that reason because they have a great track record. Genuine Parts again was one that I've looked at before, but for some reason I took it off. Sometimes I think I just slide too many times and forget that I got rid of a stock, but Genuine Parts is a good play on the auto industry, and they are pretty good for recessions because unlike manufacturers that really decline, they are actually the people that you would go to do it yourself. Kind of like an AutoZone or an O'Reilly's. They own Napa Note, like the Napa stores. So they're kind of the opposite end of the spectrum where you would go to revitalize a old used car in a bad economy. So they are still, of course, like any stock, they're probably still going to go down in a recession, but not being an actual car manufacturer, they're safer, in my opinion. So they're also a Dividend King, so that helps. They have a great track record for dividend increases, and I think that might be the only couple that I've added, being Cisco and Genuine Parts. But yeah, guys. So overall, I'm sticking pretty strict to the strategy right now. I just wanted an alternative to reinvest my earnings, because right now the two stocks that I found or that I love, being AT&T and AbbVie, have both run up. So I bought SKT. Right now, Altria Group is fine, and Coca-Cola is up a bit, but I still think it's in a buying range. But yeah, that's why I'm buying Macy's and that's why I'm buying Levi, because they're alternate investments that can still grow cash flow. So, anyways, guys, thank you so much for watching. I appreciate all the new subscribers, all the comments I've been getting on my videos. I do try really hard to respond to everybody. But remember, this isn't investment advice. I'm just sharing my story so I can go back, document it, show it to my kids, and see if I was an idiot or, if I made some decent decisions. So, anyway, guys, take care. I will see you Monday for another dividend investing video. Let's bring in the new year pretty strong, and let's keep those positive vibes, okay? I'll see you guys on Monday with a brand new dividend investing video. Take care.